is the post-COVID era dream run of 3, 4, 5 years.
Certainly.
Is that over?
So I'll say that, post-COVID 5-year fantasy run is over. Yeah. A dream run I would call is much longer term. I would say the last 40 years have been a dream run.
So the
with ups
fantasy
and
run
downs.
is over.
The fantasy, last 5 years were pure fantasy. From
Market doubled. I mean, from the March 2020 bottom
Yeah.
to, I was looking at the charts again, September, the market had just doubled.
Absolutely. See, from 2020 bottom, March 23rd, 2020, the market still, over the last 5 years, small caps, if I'm not mistaken, have quintupled. Gone up 5-fold, if I'm not mistaken. The larger caps included, I think like BSE 500 has given compounded 20% return or something. Some pockets within small caps and mid caps, certain segments which did build some excess. And the last 6 to 12 months, that froth has been to a great extent fizzled out.
It's fizzled out. But, again, I ask this in a very broad way. And I ask this from the point of view of investors who had more time during COVID and decided to come in, and they were either buying stocks directly or, buying in and out of mutual funds. And making money from the market seemed really easy. Is that time over?
Yeah, I think that time is, going forward, it's not going to be so easy. So just on that one, retail investors during such time handily beat fund managers, by the way. Yeah. And they feel that fund managers are useless because all the fund managers.
20% तो मेरे stock पे मिल रहा है.
My son, who's 13 years old, he's managing his younger brother's money already, outperforming over the last just 9 months by 25 percentage points.
Your elder son is managing your younger son's money.
And elder sister's money.
Okay.
And outperforming by 25%.
He's outperforming you also.
Our team is hardly, our team, compared to him, our team might be outperforming by 3 to 4 percentage points over this time period. So
and how old is he?
He is now going to turn 14. He's 13 and a half or so.
Imagine
So
that.
to him, his God's gift to mankind. Outperforming by such huge. Now, he'll obviously over time come to learn that markets aren't so favorable to small caps, because that's the area where he would typically, retail investors in general tend to invest in smaller caps, which have done phenomenally well. So that, I think, should at least normalize.
Most mutual fund managers will tell you that compounding over long periods of time, if you're getting 12% to 13-14% kind of returns from equities, you're well off.
Absolutely.
But then we got greedy. We've gotten used to, at least 20%, 25%. If you're in a great mid-cap or a small-cap fund or individual stocks, then, sky's the limit. So what is the new reset that we have to go back?
So if you see over the last 40 years, markets delivered close to around 14% return, but it includes the 80s and 90s where inflation was higher. Over the last 30 years, 20 years, it's been around 12% return. Going forward, assuming an inflation regime which is more in the 4 to 5% range rather than 5 to 7% range, I think a 10 to 11% return from equity markets over the next 5, 10, 15 years is a reasonable base case expectation.
10 to 11%. When people hear you say that, half of them will be pulling their hair out saying,
Pre-tax.
Prashant, what is Prashant saying?
Pre-tax. Nowadays, we have to, unlike in the past,
Exactly,
now we have to pay
12.5% tax. Assuming it remains 12.5%.
Post-tax, if you earn 10% going forward, it will be a very good outcome. In a inflation environment of 4 to 5%, 10% is very good, meaning you can double your money in 7 years.
Now that we've understood that this is a real reasonable expectation to have, I want to come to now how to go about investing in this environment. And before that, let's understand earnings. IT and FMCG are two large parts of our large cap universe. And they seem to be stuck in a rut, a low growth rut. Isn't that an overall problem for Indian equities?
See, it remains to be seen how much of it is truly structural and how much could it be on top of. There is some structural element to it, but on top, what is the cyclical element? For many years, we had double-digit growth in consumption. Consumer discretionary was, growing at mid-teens for many years during the 14 to 18 time period for several years. So I think when it settles down, I do think consumption overall can still grow high single digits.
So overall, staples, you're expecting the earnings to recover to what level?
Let's say top line growth of 7 to 10, somewhere in the 7 to 10% range, call it 8 to 9.
And by when? This year?
Oh, very hard to say. This is more like trend line.
And then IT services.
IT services, you're right. I think longer term, over the last 5 to 10 years, it has shown a tendency to be around 5% dollar terms, which is about 8% rupee terms.
Yeah.
So lower end of the staples range, I would say. But 8% is not that bad. You have to obviously marry all this with valuations.